Hey there, it's Syama, CEO of Scaling Retail. And today I want to talk about a question that I get a lot, and that has to do with fundraising and how to approach and when and how you need capital for your business. Now, oftentimes we've been seeing so many brands, you might be one of them, who's going, oh my gosh, I have this great idea and I need to get some funding. I need some money to make my idea come alive. And so that's a pretty common place to be at. And when it comes to being able to find that capital, let alone what to do with it when you have it, that can actually be a tremendous pain point. So let's unpack this into a few different phases. You know, when it comes to getting investment, the very first thing to ask yourself is, what the hell am I doing with this business? What is the product? What is the brand? Where do I think this company is going to make money from? If someone were to come to you and say, hey there, I want some money from you to help me with my idea, what would be the things that you would need from them in order to really justify that investment? You're going to need all of those things, right? And let's unpack what they are. So the first thing you're going to need is to really understand your brand positioning, your target market. What is the brand look and feel? How do you speak, right? What is the vibe of this business? What is the assortment plan going to look like? What are some of the margins that you're going to be targeting? Now, remember, in the very, very nascent stages, you won't have a ton of hardcore information and numbers, but you should be able to ascertain a lot of those different reference points from research, talking to consultants and strategists, and spending some time reading a lot of data analytics and reports that you can find online. So start to amass your product market positioning, figure out what you need the money for, and then also start to figure out what is the total addressable market and how do you think you're going to be able to reach that market. So marketing. And one of the most important things here that I like to leverage a lot with my clients is the concept of leverage. We don't think about it as often as we should. Now, leverage means who do I have or know or have close to me that's going to help me get access to either production better, marketing better, sales better. What makes me and my business uniquely positioned to take over this market? So understand your points of leverage because that makes your business and brand special. So now once you have all these pieces of information, let's talk a little bit about capital. Normally, when you're starting off your business, you're going to have to invest resources yourself in order to get things going. All of these things that I just mentioned that you'll be putting together in a short deck or some sort of presentation might end up costing you $5,000, $10,000, $15,000, $25,000, depending on who you're working with in order to be able to pull it together. Or you might decide to do it yourself. If one of your points of leverage personally is that you're an amazing designer and you know how to make a kick-ass deck, well, you've got a leg up on other people who are going to have to hire someone to do the design work. Or maybe you're an amazing strategist and you understand numbers very well and need to hire a graphic designer. Either way, get your ideas on paper and make sure you have something that's cohesive that you can then use as talking points. Now let's talk about your pre-launch fundraising and capital. Now, there are two different points where you need money. Obviously, you need money to get you to launch. You need money for those operating costs ongoing, and then you're going to need money to scale the business. So normally when I look at pre-launch and the first 18 months to even 24 months, I like to put those costs together as the initial amount of money that I'd like to have access to. Why is that? Well, I need to be able to walk into having a business saying, okay, the chances of us being profitable in this first 12 months are very low. In fact, we're still going to be refining our product market fit probably for the first 18 months, if not 24 months, before we actually understand the areas we're going to be doubling down on and where those cost centers are ultimately going to land. So going at this from a worst case scenario will actually equip me to have the right amount of capital to keep this business going over the course of 36 months. I'm assuming 12 months to get you to launch, 24 months of your operating costs before you're ready to then get a new injection of capital to then take it, let's say, to that next level. So where are you going to be able to find those resources for those first 36 months? The first place, obviously, is your own savings account. Now, of course, you hear a lot about people saying, well, just go fundraise, ask other people for money. That is certainly the case when it comes to building a tech product or something that can be very labor intensive in terms of building out technology. But when it comes to actually building your fashion brand, the majority of fashion brands are self-funded, privately funded by friends and family, and then later on actually raise other kinds of capital or get investments from, let's say, your supply chain or your manufacturer. But in these first initial stages, guys, how much money do you have in your savings account that you can comfortably put into this business? Who do you know in terms of friends and family who's going to be able to invest into your business? Have you considered going to the SBA in order to fill out an application in order to get some initial capital to get this going? You might have said to yourself, well, I want to go the Kickstarter route because I want to be able to crowdfund. Now, crowdfunding, I think, can be an amazing first step in terms of getting into new people's pocketbooks, understanding who the people are who are attracted to the brand and the product and the mission. But keep in mind, guys, that crowdfunding strategies can actually also be quite expensive. Why? Because you're not just really using it as a place to raise money, you're using it as a place to get some PR and some attention. So you're going to want to have a kick-ass video that's going to talk about your product, your mission, and who you are. You're also going to want to have your giveaway or whatever that transaction is that you're going to be giving away for that fundraising, have that really dialed down. That is certainly the route if you're going into something like a Kickstarter or an Indiegogo. Now, you have other kinds of crowdfunding equity places, like Nextseed, for example. They can help you crowdfund where you are actually able to get money without necessarily having to give away so many gifts. And in return for that, you actually have a repayment schedule brokered with the people who are lending you cash. So it's really nice because it becomes these like micro loans, if you will, that are aggregated en masse, and you do so through a platform such as Nextseed. So those are my initial strategies for getting that startup capital and startup funding. If it turns out that you actually need to hang on to your day job, which you might need to, in order to get those resources, take your time. Businesses that launch overnight, that rush to the finish line, don't often do so with a high amount of success. Certainly some do, and I'm not going to say that they don't, and I've been behind the scenes of some overnight pop-up businesses. But when we think about your long-term trajectory and growth, we want to make sure that you have solidified your brand positioning and who you are as we're then starting to pitch that out to other people so they can give you their resources. So take your time. Your savings account in terms of things from your day job are also going to come into a huge play at this moment. Now, one component that we haven't really talked too much about is the concept of angel investors. Now, we've been hearing a lot of the tech world kind of bleeding into fashion. There's certainly the concept of fashion technology, and if you have some sort of fashion tech platform, then things are going to look a little different for you. But anyone out there who's opening a boutique or opening up a retail brand, you really want to keep your eyes on things like what are angel investors, right? And how might they actually be of great use to you? Now, angel investors are kind of akin to those friends and family raises, right? Except with angel investing, there is going to be a bit of equity that you're transacting for that initial capital. Angel investors can oftentimes be found in networks. They can also be found through being in very strategic places, such as looking at places like Clubhouse, looking at places like Crunchbase, or even AngelList in order to see who's investing and where are those key opportunities. So angel investing, I think, can also be an amazing opportunity for your business. When it comes to those levels of transactions, you will want to make sure that you have the right lawyers at hand to not only ensure that your business has been set up properly, but that the right equity ownership has actually been delivered in exchange for those resources. So do not mess around with this. Sometimes we say, oh, I'm looking for an angel investor. Oh, I'm willing to give up half of the business for this capital. Talk to a lawyer. Really make sure you understand the implications of what it is you're about to do. Now, oftentimes they'll get angels who get pulled together in something called an SPV. And those are special vehicles. So maybe a lot of different angels are coming together with $10,000 to $25,000 checks, $5,000 checks. They get pulled together to go into an angel round within a company. But very important, guys, to understand, again, the implications of going for those kinds of funding. Now, the second round of funding is usually when you've received some traction, right? It's usually when you're actually, 24 months into your business, maybe a bit further out, and you're seeing some significant steam. That means the social capital, the sales, the metrics are all indicating that your business is a winner and that now it's time for you to scale up those resources. When you go back out into the market to go for fundraising and to look for that capital, you're likely going to have a phone call with your bank. You're going to talk about lines of credit. You're going to talk about exercising some loan options here. What is available to you? You might also then be looking at things like, hey, how am I going to be able to re-inject capital? What are some other opportunities? Now, you might have been like, oh my gosh, I want to go raise VC money. Well, keep in mind, guys, VCs are looking at scalable platforms. A fashion brand is not necessarily a scalable platform. To 10x your return, you have to be able to prove and show a thorough business model that actually has lines of profitability that are not simply just contingent upon marketing, right? So very, very important to kind of show where those scaled opportunities are. Now, as a direct-to-consumer brand, if you are disrupting an industry for the first time, and you're not just a normal fashion brand, right? And you're looking to really be able to reach wider markets, I'd say looking at those kind of alternative resources can actually be of a great asset to you. The other place that I would take a look at would be things like manufacturing and your supply chain. Would your manufacturers be willing to make a strategic investment in your business in order to help alleviate cash flow so you can do more in terms of marketing? Those options are also available to you at that milestone marker when everything seems to be moving in the right area. All right, guys, I feel like I could go on and on about who to contact, how to contact, the different ways of getting in front of these people, but super important that you walk away with understanding what traction needs to look like, and then also the stepping stones to get you there. Do not go after big money without having a plan and some sort of proof of concept, because you may not know what it is you have on your hands. If you're interested in exploring how to create a profitable business, the channels that you need to be developing, the places where you can start to look to find some strategic funders, please shoot us an email at hello@scalingretail.com. This is the time more than ever where access to capital is better and stronger for smaller businesses. It hasn't always been like that. A lot of the rules and regulations around investment and fundraising have shifted over the last few years to allow normal people like you and me to be investors in lots of different kinds of startup opportunities. So you want to take advantage of that. So please send us an email, hello@scalingretail. Looking forward to collaborating with you on building your model. Thanks. Bye.